Hi everybody, this is Leon Hubby and I want to welcome you to the video. This is the Income Factory Explained. Create your own income risk-free. Alright, so let's get started. Let's start with what to expect in this little video. We're going to explain in detail how the Income Factory strategy works to manufacture your own income. What we're going to cover is, we'll explain the Income Factory approach, how simple it is to implement, how to fund it risk-free, how easy it is to operate, and how to put the commissions or those profits to work for you. Here are the specifics. We'll show you how to get paid to promote the Income Factory strategy. Simply direct people to the videos, but in a very specific way, with your own unique domain name as your personal brand. See, we partner with a company called Global Domains International, or GDI, to provide that unique domain name. Now, there's a cost to it, and it's $10 per month to brand your business with a unique domain name. This is how we gain leverage and income from commissions using the GDI system. Let's take a look at this in more detail. Let me introduce you to GDI. Global Domains International, or GDI, is a worldwide registrar for the .ws domain extension. GDI is to the .ws domain what GoDaddy.com is to the .com domain. The difference is GDI will pay us to use their service. For $10 a month, GDI gives us a unique domain name, 10 email accounts, and 1 gigabit of web space. And they will pay us a $1 per month referral commission on people we refer to their service. And not just on our direct referrals, but on referrals all the way down through 5 levels of growth. They have what's called a 5-level deep Uni-Matrix compensation plan. And this is how it works. As you promote the videos, if you refer your brother as a fellow promoter, and then he refers his friend, and his friend refers a cousin, and that cousin refers a BFF, and the BFF refers his girlfriend, well, you're going to get $1 per month for each of those fellow promoters. So from one direct referral, you earn a potential of $5 in commission. Now, that is what we call real leverage. You get paid to build a network. You get an override commission on what you've built. Okay, so how exactly do we do this? Well, we promote the videos by branding ourselves with a unique and fun domain name, and we forward this domain to the Income Factory videos. We use our emails for branded communications, and we park our web space for now. So some examples of that might be www.myIncomeFactoryBiz.ws or www.moneyforever.ws or maybe even your name, www.jimandcarolzinger.ws. You then forward that to the IncomeFactory.ws domain so prospective partners can get the information. You know, the 3 video series that you're currently viewing. So here's how it works. You enroll with GDI and select a unique domain name related to the Income Factory. Let's say that it's www.myIncomeFactoryBiz.ws. You forward it to the IncomeFactory.ws domain. It takes like 3 or 4 clicks on the GDI site to get it set up. You then promote and brand your business by sending people you want to help to your unique domain name, www.myIncomeFactoryBiz.ws. When they go there, they end up at the Income Factory landing page. If they view the videos and decide to work with us, you get a commission when they get their own unique domain name with GDI to help promote the videos and the strategy. They'll get that because you will give them your referral information to register their domain name. A couple of important points as we do this that I want to point out, though. The structure gives us leverage, number one. It allows you to not have to do all the work and to have a team help you get it done. Number 2, it's low cost. I don't know of anything that's cheaper. If you do, please let me know because I want to check it out. 3, it has a built-in income stream. As you promote and as people join you, you will develop an income stream out of it. And 4, it meets the IRS's definition of a home-based internet business. So why are these points important? Well, because now we can use the tax law to fund the operation of your business. All right, so let me tell you how you fund this risk-free. This is how we do this. We use the tax laws to keep more money in our current paycheck and use that to fund our business. That way, you're not using any of your current budget to do it. Not only will it fund the business without using any of that budget money, but it'll also likely allow you to increase your budget. Let's see how and why this works. All right, some tax laws points worth noting as I go through this. Number one, just by starting a home based business, you can put extra dollars into your current paycheck. See, the IRS doesn't care if you make a profit, just that you tried to make one. Number two, the tax benefit is extra. It does not reduce your typical refund. You're creating an extra deduction using your personal expenses that lowers your taxes. And the national average tax savings can be worth up to an extra $4,000 a year. And that's a little bit dated, so I suspect that it's even higher. And three, you don't do extra work to document your business. You just do work a little bit differently. All right, so let's look at why this works, how it works, what the tax laws tell us about it. It has to do with you earning a wage versus generating a profit. You see, the tax rules are different for employees and business owners. Let's go through a quick example. Let's say that you're an employee. You're going to earn your money. You're going to immediately get taxed on it, right? What's the first thing that happens? Right off the top, they pull out your payroll taxes and your income tax, right? And then you get to spend whatever's left. Well, that's different for the business owner, though. When the business owner earns his money, he gets to spend on his expenses first, and then he gets taxed on what's left over. Let's look at a quick example. Let's say that you're an employee and you're earning $3,000 a month or $36,000 a year. You're going to have a marginal income tax rate of about 20%. This is the level that they apply when you first go ahead and you get in there. And we're only talking about income tax. We can't touch payroll taxes. So it would deduct $600 from your income, leaving you with $2,400 to spend. But that's different on the business owner side. Let's take a look. The business owner earns, let's say, the same amount, $3,000 a month. And let's say that his spending is identical to yours. He has $2,400 in expenses. He would then get taxed on $600 at that same 20% rate. That would be $120. Now, I don't know about you, but the $480 he doesn't pay is a big difference. How would that impact you if you were able to pay $120 in taxes versus the $600 that you would normally pay? I'm willing to bet it would make a big difference in your life. Okay, so why is this the case? Let's go and look and see why that is the case. When you're an employee, you're not at risk for your money, right? You're trading your time and your skills to somebody who's hired you to go ahead and help them get their business conducted. So, from a tax perspective, the IRS says that you have non business related personal expenses, and you're just going to end up paying those post tax, right? And the reason for that is you're taking capital out of that company that's hired you. But now a business owner, he's at risk, right? Because he puts money in, he pays you to do something, and there's no guarantee of a profit. So, from a tax perspective, he has business related expenses that he gets to take pre tax to offset revenue for a break on his taxes. That's the candy that they give the business owners. And the reason for that is they use capital to create a cash flow, which may or may not result in profit. All right, so let's go ahead and let's ask us a question. Is there a way for us to use the business owner rules? I mean, because realistically, we want to use those rules if we can because there's a better tax treatment, right? Congress wrote the laws differently to reflect the difference in how they make their money. But is there a way for us to do that? Well, the answer to that is yes. Congress provided a way. You create a home based business and be technically at risk. That way, you can convert some of your personal expenses into legitimate business expense. All right, so let's take a look at the rules of how it works. Okay, special rules apply for having a home based business, and it needs to be a home based business. That's important. The IRS recognizes that you're using personal assets and expenses to operate your business, putting you technically at risk in the eyes of the IRS. The IRS will then allow you to convert business use portion of your personal expenses into business expenses. So let's ask, are you really at risk though? No, not really, since these are current personal expenses being converted to business expenses. You're already paying them post tax from your job, right? This will reduce your current tax situation though. The IRS will allow you to deduct the business use portion of your personal expense as business expense, reducing your wage income before your tax calculation, reducing your taxes. Now, again, these are expenses that you're already paying post tax, right? Now you can pay them pre tax. They're your cell phone, they're your portion of your rent, or a portion of your insurance, a portion of your utility bills, all that type of stuff. They allow this because you're using these expenses to run your business and because you are active and not passive in your business. And that are two very important points. That allows you to use the expenses to offset excess earned income after business income. In a business, you get to offset your business income first, but with a home based business, if you have leftover expenses, you can also offset earned income. And since you're in the startup phase of your business and have little to no income yet, it can all be used to reduce your tax liability from earned income. So generally, these expenses are consistent and predictable as well, right? Your cell phone doesn't generally change, your insurance payment doesn't generally change, your rent doesn't generally change, your electric bill doesn't generally change, your gas bill doesn't change, all those type of things. So you can make a calculation, you can file an updated W-4 form with your employer, and you can keep a portion of the difference in your paycheck. So what do you do with that? Well, you fund your business, of course, because it's not very expensive, $10 a month. And then you put more money in your current budget to either pay down debt or invest in growing your wealth. All right, so let's take a look at a real world case, how it might impact you. Here's the scenario. You're an employee, you're working your job, you're earning your $3,000, you're paying your $600 a month in taxes, and you have $2,400 to spend on your bills. So you decide, hey, this looks pretty good. I'm going to become a business owner. I'm going to create a income factory business called myIncomeFactoryBiz.ws. So one of the first things you'll do when you do that is you decide how much time you're going to put into your business. So you decide, I'm going to put 60% of my free time into my business and 40% is going to be in personal leisure time. When you do that, you're going to end up with two categories for expense, operating expense and your home office expense. So let's look at the operating expense first. You go ahead and you get started. And if you're like me, you have a T-Mobile cell plan that's worth $45, so you will get to deduct $27 of that. If you have internet that's $75, you can deduct $45. We have supplies that we've accumulated over the years that we just subtract from the company, charge to the company, that is $15. We have meals for $120. So where do those meals come from? Well, when I go to my place of employment to work, sometimes I'll go out, and whenever I go out, I bring somebody and tell them about my business, or I hand cards out when I'm at the restaurant and tell people about my business so that I can make it a business trip and deduct the cost of those meals. Mileage, $196. That's 300 miles per month at the current rate of 0.655 cents per mile that the IRS allows us to deduct. So where do those miles come from? Well, when I come home from work, I go to my home office and I do my business. So those miles are business miles and they're deductible. When I go to work, if I stop at a Starbucks or someplace and have a cup of coffee and hand out cards or meet somebody there and tell them about the business, those miles are deductible. Now, I can't deduct my miles from home to my work directly, but if I'm smart and stop at that Starbucks, I can deduct the majority of them. Promotional expense, that GDI expense, that $10 per month you're going to have to get your unique domain name, you can deduct that too. And if you put your children in child care, you can deduct the portion of the time that they're in child care that you conduct your business. So let's say that you put them in child care while you're going to work, and they can be in there till 5:30, but you get out at 4. If you let them stay in child care for that extra hour and a half, you can deduct that time and that cost that's associated with it. All right? Now, you also have home office expense, and we have it marked at 10%. Here's how this works. If you have a dedicated office that you use to conduct your business, you can deduct based on the size of its floor space proportional to the house the same amount in expenses that are related to the house. So, for example, you can't use your dining room table, you can't use your kitchen table, right? It can't be a desk in your bedroom unless you go ahead and you build a wall or cordon it off with partitions to make it a dedicated space. So, an example for us is we don't ever use our living room for anything to other than, well, nothing, quite frankly. So we turn that into a business office, and it gives us a 30% deduction with respect to the size of the house. Now, in this case, we're assuming that it's 10%. And let's say that you're renting a townhouse or something for $2,100 a month. So you'll get to deduct $210 in rent. Your electricity at 11, your utilities at 16, your insurance at 10, maintenance and repair. Let's say that you're responsible for the first $100 of repair, so you can deduct $10 a month for that. Let's say that you're not responsible for any of the lawn care or anything like that. Okay, well, all those expenses total $670 in business expense. So here's the impact to you. Again, you're working your job, you're making your 3,000, you've been paying that. But now you are a business owner with a home-based business promoting the income factory, and you have $670 worth of expenses. So you get to deduct that off of your earned income of $3,000, giving you a new taxable amount of $2,330. When you apply your 20% tax, you're only paying $466 in tax instead of the original $600. You just put an extra $134 into your paycheck in your pocket. So what do? Well, let's take $24 of it a month, pay our GDI bill, and have a little extra spending money in case we want to do business cards or something, and then put $110 into our pocket to either make our life easier, pay down debt if we want, or to start doing some investing. All right, now there are rules to this. Of course, there are rules, there always are. To be legal, the business must meet three specific rules, though: the intent to make money versus save on those taxes, the expenses must be both necessary and reasonable, and it must serve some business purpose or add value in the transaction. Let's go ahead and take a look at what the definitions of those are, how they apply, and if we have a real business there, okay? So business intent, and the IRS defines that as to make money in some legal fashion. So what we do is we promote and we teach people how to create and use a home-based internet business to create income, right? Every business must promote their product or service, right? So let's say that you make the best darn Toll House chocolate chip cookies in the world. Everybody says, hey, you need to go ahead and cook these, put them on the internet and sell them. So you decide to go ahead and do that. Are you going to sell any of those cookies if you don't promote the business and the fact that you're out there and that they can get them online? Well, of course not. Well, the same applies to any business. Now, what we do is we've set our business up to earn income using our unique domain name to promote the income factory, right? We get commissions when a partner enrolls as a result of our promotions directly. So as long as you have one, a unique domain name, so that you're plugged into the income stream, you get commissions. Two, and that we use those domain names to promote the income factory and we physically ask people to look, we clearly demonstrate our intent is to make money since the actions earn us potential commissions. We have a clear path to money, and our actions equals the intent to earn. So check that box off. We have a business intent. All right, necessary and reasonable expenses. And this one isn't really hard. It's just understanding what necessary means, right? Necessary is as related to the business type, and that is promotional, right? So you can take any expense that's related to promoting an internet site, your cell phone, the internet, vehicle expense if you sit with people and tell them that they need to go there, meals and lodging if you travel or you entertain, advertising and promoting, and of course your home office expenses. Let me give you an example to further define this. Let's say that you jump into this business and after a while running it, you decided you're going to throw a party at your home to invite people over because you haven't seen them in a while. But when you do that, the first thing you do when they walk on the door is you give them a business card, you point them to a computer that's set up on your big screen, and you show them the initial site and you say, hey, you don't have to look at it now, but do us a favor, and when you get a chance, go ahead and look at the site and just let us know what you think. And you go do that, and you bust out the wings, and you bust out all the salads, and you put on a big game, and you party hardy, right? At the end of the month, you go ahead and you deduct that from your taxes, and when you file everything, the IRS says, okie dokie, we're cool with that. Now, let's say that happened in January, and you decide when summer rolls around, you're going to do the same thing, but you're going to do it up on the big pontoon boat you have at the lake. So you do the identical thing, but you do it at the lake, and you set everything up, and you do it. But this time, when you go ahead and submit it, the IRS goes, that's not legitimate. Why? Well, the reason is a pontoon boat isn't necessary to promote an internet business where your home office is necessary. All right, so I wanted to draw that distinction between necessary and non-necessary expenses. Now let's talk about reasonable, and that is as long as we're honest about the proportional use of our assets, those expenses we mentioned above, there'll be no issue here. The IRS has given plenty of guidance on this. Just be honest about it. If you're in the national averages for the expenses that you have, they're never, ever, ever going to question that. So you'll be kosher. So check that box off. We have necessary and reasonable expenses in doing this. And the final one is a business purpose. And you bet, in fact, we have 3 business purposes. Number 1, the education of the public on how to set up and use a home-based internet business to create income. You can pay good money at some university to learn how to do that, right? You can go to school for it. We're giving it away free. We're showing them how to do that. 2, you help promote the Income Factory website for the site owners, i.e., us, so that we can potentially monetize the site if and when it becomes popular. So think about what's happening here. Every time somebody signs up, they get a unique domain name and they point it at this site, and people go there and look at videos. That could drive the Alexa numbers on the internet up, make the site very popular, and we might be able to monetize it. So there's another business purpose. You're promoting for us. And then finally, if they decide to join you, you're going to get a domain package sale for GDI. So you're actually going to sell a product. So there are 3 purposes. Check that box. We're good to go. We have a very real business here. All right. So let's summarize some important points from that so you really get it. Number 1, because you created a home-based internet business and are active, you can take excess expense and apply it against your earned income to reduce your tax liability, right? We're legal because we specifically set the business up to meet those rules. And you've already affected your bottom line, right? Because you've already pumped money into it because you found a way to reduce your taxes and keep more in your pockets. And since you have regular expenses, you can budget and deduct those expenses monthly to increase your monthly paycheck, right? They're all the same. Set them up, and there you go. You're going to have a monthly income stream that has increased, right? And 3, you reconcile at the end of the year or the month if you want versus your actual income and expenses. And it's usually a net positive to the bottom line in just about every case that I've seen. And 4, this was important. This is why I bolded it. You can affect your bottom line by your actions alone. Okay? What I mean by that is you go and set the business up, you go and do your paperwork, and all of a sudden, if all you do is just tell people about it, take the actions that are necessary, none of them have to sign up, none of them even have to go and look. It's all up to you. So tomorrow you can go out and change your financial position by just setting up the business and promoting it. And then finally, number 5, the potential of producing additional income from the commissions, right? This can become a self-fulfilling prophecy. Think about what you're doing. You show people how to put extra cash in their pockets by their actions alone. All they have to do is set up. Once that light bulb goes off, and if you can get the people you're talking about, hey, all you got to do is set it up and you're going to immediately change your financial future by putting more money in your pocket. Well, what do they got to do? Well, they got to go sign up in order to do it, so you start to generate income from it, and they start to generate income from it when they promote it. All right, so let's talk about operations and growth, because you got to be thinking, this must be difficult. Well, it's not. All you're going to do is just send people to the Income Factory site via your own domain name. That's all you're doing, right? As people review the information, if they elect to join us, 2 things are going to occur. You're going to generate commissions when they get their unique domain name, right? Because they're going to sign up using your referral information. And your growth move towards automatic and a magic moment. This is where we talked about at the very beginning in the first video about it being an asset based where you don't have to do all the work yourself. Here's how it works. Here's what the magic moment is. You start this off, you go out, and in month 1 or 2, you find somebody. You decide who's going to sign up. So how many are out there promoting it? 2, right? You and the guy you promoted. Well, if you both go out and do the same thing and you each get another person, what happens? You jump to 4 people promoting it. And then if that 4 go out and do the same thing, what does it jump to? 8. You're geometrically doubling every time you go out and do and get a sign up. So at some point, what happens is the effect of everybody getting it is much larger than the effect of you just doing it. And that's when you hit the magic moment. That's when things snowball on you and the thing takes off because all of a sudden you're geometrically doubling at a very rapid rate. And you don't have to personally recruit a bazillion people, right? If we all do the same thing and simply recruit just one person a month for a year, so you're recruiting 12 people, you have the potential of creating a $3 million business over time. Okay? Now, just ask us about this strategy. We have a strategy video that shows you how this works and how we do this. So we can go ahead and give you some tips and pointers on that. Also, you're documenting your business is easy. You use the business tracker spreadsheet that we created to keep your receipts. You don't have to have QuickBooks or anything. You just use the spreadsheet that we've created to track what your income is and what your expenses are. Everything else you already have and do since you pay your bills already, right? Because you got statements for what your bills are, so you can print them off at any time. You don't have to do any duplication of work there. All right, so let's talk about putting those profits to work for you. Let's say that you've been doing it and you're generating some profits now. So what do you do with those profits? You could put them in your pocket and just enjoy life, right? But we got a better idea, we think. Let your money make money for you too, right? We use the investing platforms to grow our wealth. We use Stash for ETF investing. We use Fundrise for real estate investing. And we use Coinbase for crypto investing. That way, we put a significant portion of the income that we're generating from the promotions business into platforms that continue to take that money that is very heavily leveraged and leverage it even more. We use the following formula to do that. We take our revenue, right? We subtract the expenses, that $670 number from earlier in this video. And what's left over when we do that is our operating expense. Your expenses will be offset that revenue that you generated by that same amount, $670, and they won't be taxed. You take that operating profit, right, that money that's left over after you take that $670 off, you subtract off 25% of it to make sure that you can pay taxes on your profit because you're going to have to do that. And that's what we call net operating profits. You take your net operating profit, you add back that offset, that $670 that you saved because you had those expenses, that's your net income. You take that net income, you divide it by 5, and that equals your distributions. How are you going to distribute it? Well, you're going to put 20% in savings for a rainy day. You're going to put 20% in each of the platforms, so you have 60% of your money going back to produce more money, and then you're going to take 20% of it and put it in your pocket, into your budget, so that you can have a more comfortable life and have a little fun because you've worked hard to get there. So let's say that your net income is $1,000. When you divide it by 5, that'll be $200 each. $200 in savings, $200 in each of the platforms, and $200 into your pocket. So that's the potential of what you have to look forward to. All right, so let's summarize all this up. What did we do? Well, we showed you how to manufacture your own income, right? You create a home-based internet business promoting the income factory strategy. You use a unique domain name from GDI to brand your business and earn commissions promoting the strategy. Use the tax laws to fund your business and increase your budget, right? Because the IRS says you can, we might as well do it. You're going to end up with 5 assets if you do that, right? You're going to end up with the income factory promotions business that you just set up and you're doing. You're going to end up with a stock account that's growing in Stash. You're going to end up with a real estate account that's growing in Fundrise. You're going to end up with a crypto account that's growing in Coinbase. And you're going to have a growing cash savings account because you're stuffing money into that, all right? No money from your budget is ever used to do this. We found you extra money, so you haven't disturbed your budget at all, and now you're producing it off of leveraged money. Simply sponsor one person a month and teach them to do the same thing. This will lead to automatic growth for you. and we're legal. Why? Because we follow the rules. All right, so what's next? Well, we want to thank you for watching. We know your time is valuable, so we appreciate you taking the time to get the information. If you are interested in us, please watch Putting It All Together video to sum up everything and to get directions on how to get involved. You can email or call whoever sent you here to get your questions answered, and we have all the information that you could ever want, right? All you have to do is ask us for it, and we'll plug you into what you need. If you want to get a hold of us directly, you can do that at the incomefactoryinfo@gmail.com. All right, again, thanks for watching. We hope to see you in the next video, and we hope that you have an absolute fantastic day.